The Super Bowl is over, and the spring market might be giving us some things to love. I'm Tony with Clarkson Santoro, and this is your real estate update for the week of Friday, February 13th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. Before we start off with how the market might be looking, let's see what it did this week. There are 32 homes active on the market, one fewer than last week. And the average asking price is $1,901,000, up significantly from the $1,750,000 we had for an average asking price last week. 10 homes went pending, which is a huge increase over the 3 pending sales we had last week. And the average asking price for those pending sales is also a nice improvement at $2,042,000, up from the $1,066,000 average we had last week. And 3 homes closed this week, obviously much better than the 0 we had last week, with an average asking price or closing price of $1,450,000, which is low, and that affects our average sales price numbers, but we'll get to that later. So now we know how the market performed this past week. Next, we like to look at how the market might be heading, or where the market might be heading, I should say, and the market indicators that help us determine that. But before we do that, if this information is helpful to you, why don't you hit the subscribe button down below so you don't miss out on future updates. And while you're down there, why not share it with a friend also? Everyone deserves to be in the know about their local real estate market and how it is affecting them. Okay, let's take a closer look at the indicators and where the market might be heading. Inventory basically stayed flat this week. There's one less house this week compared to last. And this is a good sign because we had several weeks in a row of increasing inventory, with several more homes listed as coming soon. So a week of stagnation, and even reduction a little bit, could be an indicator that buyers are starting to engage more. This trend up being stifled right here is a great sign. Buyer engagement being up is further demonstrated by the turnover rate. While it's still well below that 100% mark that we like to see for a neutral market, it made significant strides to returning to that 100% level this week. Like I mentioned at the beginning, 10 homes went pending this week, which is the first time weekly pending sales have been in the double digits since October of last year. If we are able to maintain double-digit pending sales on a week-to-week basis, we will be back to neutral or positive turnover rate rather quickly. This spike straight up could continue, which would be excellent. The 2 real-time indicators are starting to show signs that the spring market could be healthier than the past 2 years. That is encouraging news for sellers. And more encouraging news for sellers is that the over-under number has improved significantly and is back in the over range again this week. Lots of up lines on these trends this week. This indicator has been bouncing back and forth between the over and the under, especially over the past few months. There's the break-even line. You see it up and down quite a bit. So we'll see if it can remain in the over before making any judgments on what it means for our market. But it is still a good sign. On the average sales price, the closing prices, on the other hand, dipped a little bit this week, from just over 1.8 to just under 1.8. That dip is due to 3 lower price homes closing this week. That does not reflect a steep decline in actual home values, but it is important to remember that the last year did see a small decline in average sales price year over year compared to the previous year. This week and last week, average asking price for pending sales was well above 1.9, So we should see the average closing price come back up soon, and probably cross the 1.9 range here in a couple of weeks. The triple Q levels leveled off this week, dropping back below the ending value of last week after it had spiked a little bit on Thursday. Silicon Valley will continue to be the biggest driving force for buyer activity in our market. So as tech equities stagnate, that can cause some buyers to pause on their pursuit of new housing. Although this week's 10 pending sales would beg to differ with that statement. So we'll see which tug of war wins out here. Interest rates didn't make any big movements this week, not surprising. The average dropped 2 basis points, still sitting right around that 6.1% that we have seen for about a month now. So nothing really to talk about there. This week gave me hope that this year we'll see some improvement compared to last year's overall market. It is a tempered hope, as some of the predictive indicators are still showing resistant markers to market growth. The over-under number getting back into the over position and 10 homes going pending this week is the biggest green flag for me that the market could be improving. Hopefully that's not a one-off stat for this week, but can become a trend. If the turnover rate climbs above 100% and stays there for a while, that would be good news for both buyers and sellers. Sellers could look forward to an easier market experience this year compared to last, and in turn, buyers would be able to look forward to more homes of total inventory for them to choose from. So again, a win-win for both. Thank you for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you can stay informed on how the market starts to shape up this year. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying, please leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe and fun Valentine's weekend, and I'll see you next week with a new update.